John, good to see you. We're going to dive into the headlines today with markets and geopolitics. When will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical events tend to only have a temporary impact on stocks. I do want to look at what this looks like, though, for the S&P 500. We take a look at the one-month performance here. We see a lot of red on the board. Why do we tend to see stocks fall first when tensions rise?
Markets never like uncertainty, and
Yeah.
certainly when you're talking about oil and you're talking about geopolitical risks, then you're watching the news and there's lots of headlines. There's stock options out there that maybe are going a different way than maybe some of the advisors had anticipated. Those are the type of dynamics that come into play that maybe shifts the market lower, at least on the short term.
Especially when we've seen the S&P do so well this year, kind of makes sense. All right, so I want to talk about, again, how the S&P historically usually recovers relatively quickly from geopolitical events. So take a look at this chart, which lays out several events and mostly short, shallow pullbacks. Talk us through what we're looking at.
Sure. What you're looking at there is various conflicts that have happened in the past, and we've addressed this actually a couple of years ago during the Ukraine war. And really, what it just comes down to is, uh, during the short-term periods, we see some market volatility, but usually, after a little bit of time, the market does recover. So it really it's important to not make knee-jerk reactions just because of what we're watching on the news or you're just worried about little different things. Really, you should already have your risk tolerance structured in a certain way within your
Mhm,
portfolio.
mhm.
And if not, if you're feeling a little funny on that, that's a good time to get a hold of us so that way we can help walk you through some of your
Mhm.
choices on how you can react to that.
For investors watching these headlines and rising oil prices, what's the most important perspective we should be keeping in mind before making portfolio decisions?
Again, I think it's having that long term view. You got to know what your end goal is. If you're planning to retire in 10 years, is taking your money out of the market because of short term war scenario. Is that a smart thing to do for your portfolio? Probably not. So
Mhm.
really, you just want to review that and just make sure that you're on your track for your retirement,
Right.
and not overreact to some of these events that can happen. And whether it's this oil conflict with Iran or something larger, either way, you want to have that long term view on what you're doing.
Right. When we have a financial plan, we are less likely to make those knee jerk emotional decisions. And this brings us to our last point, John, which is emotional investing. Explain how we tend to make the wrong decisions when we're led by emotions.
Sure, and I can tell you when we're doing risk profiles with people, it's kind of funny how sometimes when the market's doing well, I notice that the risk profile changes a little bit for
Yeah.
people, where they get once the things are going well, it's really easy to start thinking about, oh man, the news is talking a lot about good stuff. I want to make sure I'm a part of that. And then you get into it, and then we're at a spot where the winds change and the market drops. And really, what you get caught there is called a whipsaw scenario where you're constantly finding yourself buying into the market on the high and selling on the low. And
Mhm.
really, when you're working with an advisor, we're trying to avoid that for you. And that's really a big part of the risk profile that we do for people to really get a good pulse of where they're sitting.
Right. Well, John, again, it comes back to having a plan that's based on data as opposed to headlines and emotions. So if somebody would like to sit down and create that financial plan with you, what's the best way to reach you?
Yes, 440-471-4300. Best way to get a hold of us, give us a call. And then, sure enough, if you go on our website as well, clarkwealthadvisor.com, there is a somewhere you can click there and you can go ahead and shoot us an email as well, and we'll get a hold of you that way. So
All right.
keep it
All
simple.
the ways. Yeah. John, thank you so much for your time today. I appreciate it.
Thank you. Bye now.